All right. Hi, everybody. Welcome back to another episode installment of the Vaz+Harwood Academy. Today, we are so excited to be here with Bryan Kerswell, who's one of our favorite mortgage professionals and uh, incidentally, also another dad at our kid's school, so that's cool. Just a fun fact, completely randomly, by the way, but that's fun. And the reason we're having Bryan on today, mainly, is to talk about credit because he is a credit guru. I think you're like FICO certified and all that kind of stuff too.
Yes, FICO certified professional. Credit nerd, big credit nerd.
Yeah, yeah. So we know a few things about credit on the real estate side, but there's a lot of ins and outs of it, and I think it's really unfortunate that it's so opaque. It's like some kind of dark art or something, and it doesn't have to be, but we're just not um, we're just not raised culturally for some reason to really understand it. It's just this thing that affects us, but we don't really know what to do in most cases. I certainly didn't, and even up until the time when we bought a house, I wasn't really even taking it that seriously. And I just want to, kick it over to Bryan here, but I also want to say too that my credit was very, very high at one time, and we had some problems that were related to, medical things, life circumstances, whatever. And it took a big nosedive, and then we rebuilt it. And it didn't take as long as we thought, and it was all possible to fix. So I've kind of been through some of this personally, and no one should have any shame about any questions or where you're at in your credit journey. It's all fixable. It's all doable, especially if you want to buy a house.
Absolutely.
Without further ado, hi Bryan.
Hello, thanks for having me, everybody. Excited to be here. Excited to talk credit. Like Andy has said, I'm a FICO certified uh, mortgage advisor, but prior to being in loan origination, I work with credit repair, credit restoration. Taking the test, know the guidelines, did the certificates to become FICO certified. So very well could be the only FICO certified loan officer that you may ever come across. And I operate my business quite a bit differently than probably any other loan officer, which we'll get into a little bit. But excited to be here, excited to help you out personally, your clients out. Uh, I for 12 years now I've been doing credit repair, and I learned early in my days, don't ever judge a book by its cover. Like Andy said, we have no idea what we've been through, medical, death, losing of a job. Because you have the struggling credit does not mean, that does not define you as a person. That does not mean that you always have to have that credit profile. FICO is literally math. It's a algorithm. If you do what you're supposed to do, it literally has to work. And we're going to break that down a little bit. And it's a huge one thing that I hope you come across, you take away from today. It is a ginormous passion of mine. And I'd be more than happy to help any of you, your friends, your family, anybody out that I can. So thanks for having me.
Awesome. Yeah, it's not something that seals your fate.
Right. Yeah.
Yeah. And
Definitely.
there's nobody out there to get you. There's no evil bank or something that's,
Yeah.
I used to think that kind of thing too.
Right.
It's
Yep.
just it's just an algorithm thing.
Yep. The bureaus don't, they're not vindictive against us, which again, I'll get
Yeah.
into a little bit when we break down who the credit bureaus are. But I guess let's get into it. If you want to open up the um,
Yeah.
or there it is.
Perfect.
Cool. This is a little introduction. We can go to the next slide. I do quite a bit of few of these for buying seminars or other real estate agents. So this one's not specifically tied to the Vaz+Harwood team, nothing like that, but more or less just an overview.
It's
Um,
perfect.
so let's get into the different types of credit scores. I mean, most people, I'm assuming, have heard the term FICO, FICO, and that's what I am. I'm FICO certified to the algorithm, your rights as a consumer, what you should be doing, shouldn't be doing, and how to build that profile for the future. And then some of you, maybe none of you, have ever heard of the Vantage scoring system. And that's more of like a consumer score. So anytime that we have, the biggest one out there is probably Credit Karma. Maybe all of us have Credit Karma. Some of us have Credit Karma.
Mhm.
Any online scoring model that's consumer facing. There's no risk built into those scores. Where a FICO score, always think of it as a 100% risk assessment. If I'm going to walk into Andy's bank and I'm going to say, hey, I want to go buy that new truck, he is pulling my credit solely based off of risk.
Yeah.
Always remember that. Can Bryan handle more? Based off of what he has, is he able to even handle more? And if he can, is it going to be a 3% because he's awesome, or 23% because he maybe struggles? So always remember that FICO is a 100% risk assessment. And Vantage scoring algorithm and FICO algorithm, it's an apple and an orange. It's completely different models. So typically, what we'll see is the scores that we're going to notice online, the Credit Karmas, they're probably going to be quite a bit higher than our FICO scores, because FICO takes into consideration of risk. And we're going to break down that pie chart here shortly.
I can tell you this personally too, because um, when we bought a house ourselves, I truly thought that a credit score was kind of a credit score. I didn't even understand that, and I didn't realize that what you see on Credit Karma and Mint.com and stuff like
Yeah.
those, it's good. I think it's a great thing to keep an eye on it.
Yep.
But when they actually pull your FICO scores, they were lower.
Yep.
And I was like, oh, okay. Now I
So those
understand.
aren't my scores.
Yeah, yeah, they're not really. Yeah.
Nora, I don't see anywhere where I'm able to go to the next screen. There you go. All right. So credit bureaus themselves, we probably all have the names TransUnion, Equifax, and Experian. Easiest way I'd like to explain who these entities are is they're money making, money seeking entities.
Mhm.
So Nike, Reebok, and Adidas, however you want to think about them. But it's written in the federal guidelines, like it's not their job to verify the information that gets reported from Andy and Bryan and Nora that goes onto our credit reports. It is solely our job to verify that information, which we'll get into why and how. But these are three independently owned money making, money seeking entities. There's 400 million of us in America, and it's not their job to verify what goes on to individual reports. It's all computer generated. It's not like on day 29, TransUnion sends me an email saying, hey, don't forget your American Express payment is due tomorrow. TransUnion does not care about me. They're not vindictive against me, but they're just taking in all of our information and they're putting into our credit report the way that the businesses, the entities, the lenders give them that information. And a huge thing we're going to get into today is the credit card game and how to properly play the due date and the statement date to get the most out of our buying power and to get the most out of our FICO scores. But always remember that these three bureaus are not one company. They're three independently owned money making, money seeking entities that take in our information. Okay.
And who are their customers? If you could say, what do they sell exactly? I mean, they sell our credit report.
Yep, they sell our credit report and they take in the information from all the lenders, banks, credit unions,
Mhm.
institutions that report to the credit bureaus. But that's a great question, Andy, because let's say that Andy and I own a credit union.
Yeah, let's say we own a bank. We own
Yep.
Bryan and Andy's bank.
We
First
need
bank of,
we
yeah,
need to pay to play. So if we want to report to the credit bureaus,
yeah,
we need to pay the credit bureaus,
yes.
right?
Yeah,
So
we have to
you may
sign up for
work with a
that.
small bank
Yeah.
or a bank with a small credit union or a bank up north,
Hmm.
and you ask them, hey, like, I want to get an auto loan through you. Well, just know, or I want to get a secure credit card through you to start building credit. Just know that they may not report to all three bureaus. So you're not maximizing that score algorithm and that score and that buying profile on all three of those profiles and bureaus. Does that make sense?
Yeah, it's probably safe to say would you agree that most major banks do?
100%. Yeah.
Most, if not all, but if there's some place that's a small credit union or whatever, you
Yes.
might want to ask if you will want to ask if they report to all three. Not to say don't do business with them, but then you might want to have another credit card somewhere else. I'm sure I'm jumping ahead, but
Yep. No, exactly. Exactly. We'll
yeah,
get into that more, especially when we talk about like secure credit cards and what we need to
yeah,
do to build profiles.
cool. And Nora, you're driving the slides, right? Okay.
Just tell me when you want me to move.
I will.
I don't know if you're taking a break because you want me to move or because you just are taking a break. So just
right.
give me like a
We'll work out a system. We'll work
Yeah.
out.
All right, so let's break down the FICO algorithm. The biggest piece of the pie is how well am I going to pay back the money that I have borrowed?
Mhm.
Okay, so the biggest piece of that pie, as you can see, is 35%. 35% of that score is calculated by how well or bad do I pay back the money that I have borrowed? Not
Mhm.
our rent, our YouTube TVs, our Netflixes, our cell phones. It's our credit report is the history of money that we have borrowed. It always and forever will be a risk assessment on lent money. Okay. So
Mhm.
you have a 700 credit score and you miss one $35 payment on a credit card, which I'm sure has happened to some, if not all of us, what that does to our credit profile, you were not at risk. And then all of a sudden, okay, what's going on? He missed a payment. Having that score drop is going to be pretty drastic, quite a bit different than somebody if they have 8 collections and they get another collection. They're already showing themselves and the bureaus and the financial institutions that they're a pretty big risk, and then they get another collection, not that big of a deal. But again, FICO is a risk assessment. Okay.
Mhm. And
Amounts owed. Yeah, go
again,
ahead,
not that
Andy.
they're not that they're a bad person or
Right.
that they're a screw up in life, but
Right.
they're simply a risk for lending.
Absolutely.
That's it, right?
Absolutely.
Yeah.
30% of our credit score is money owed versus money available. So easy way that I like to put it is, let's say credit cards. How high are my limits and how low are my credit card balances?
Mhm.
Now, if I ask any one of you, what's the ideal balance limit ratio, which I have asked thousands and thousands of people that question, and everybody says, oh, I've always heard it was 30%. Is 30% bad? No. Is it great? No. Knowing that FICO is a risk assessment, why not 1%? Why not 3%? And we're going to get into this credit card game and the right way to play this game. But the biggest thing that I want this to be taken away on this slide so far is if you are financially able, every dollar that we borrow should be set up on auto pay. Auto pay, auto pay, auto pay. So we know that 35% is an A++. You never miss a payment. If you're financially able, set every account up on auto pay. Your credit cards, it's a tighter month. Pay that minimum monthly payment of $25 because it's going to be set up automatically. The biggest factors you pay, you make the payments on time. And then we'll get into, again, the credit cards of how we can pay at different times of the month to get the most out of the FICO score. Okay. Length of credit history is a big one. This is one that really gets overlooked a lot. I understand that it's only 15% of our credit score, but I see it weekly on credit reports. We get older, we get better credit, we get better offers in the mail. We really like this in New American Express because I get more miles. And all of a sudden, I'm going to stop using the ones that even got me here. I'm going to stop using the credit cards that allowed me to build this credit profile. Don't ever close credit cards and don't ever stop using your old credit cards. 15% of our score is length of history. If you financially don't need to use your old credit card, you financially don't want to use your old credit card, put Netflix on it, put Hulu on it, put one small bill on there and set it up on auto pay where your checking account goes in and pays off that Netflix every single month. So that old credit card that you've had from 2000, it's a $20 balance every single month with a limit of 5,000, and you just let it ride. Okay. And then new credit and types of credit. We're going to talk about that, but types of credit, what is going to make a very strong credit profile? There's two types of accounts. There's revolving debt, which are credit cards, and that could be your standard credit card or a store card. They're both revolving accounts.
Yep.
And then installment debt, mortgages, auto loans, student loans. If we don't have those, I have one of the coolest programs that we're going to go over to help you build and have a mixture of types of credit, which we'll get into. All right, Nora, I'm good. Okay, so a couple of big takeaways up to this point. Auto pay. Auto pay is very important. We want to maximize on that 35% of the FICO score. Auto pay the account so your bills are paid on time every single month. Okay. Collections. Let's get into collections. This is a big one that most people have never heard some of these things. First of all, paying on a collection will negatively impact your credit score. Okay, most people have never heard that. They want to fix your credit. They want to buy a house. They even go talk to a loan officer. Loan officer says, yeah, you got to pay off some of these collections. You are taking steps backwards in order to purchase a home. Okay. Every account on our credit report has what's called a DOLA, a date of last activity. My mortgage, my auto loan, August of 23. Our credit reports are about 40 days behind us, so most likely September hasn't posted yet. When an account goes into a collection status, it's dead. It sits there. There's no activity. So in 2019, account goes into a collection status. The date of last activity is 2019. You want to fix your credit? You think the best thing to do is start calling up these collection companies. Let's say one is luckily still holding on to it. You pay it. You think you're doing the right thing, which I will never tell you to run from your debt. I will never tell you not to pay your debt. But technically, you're going to drop your score because you renewed that date of last activity to 2023. Then the collection sits there. It's going to show paid, but you already did the damage. You already got the collection. And then you paid it. So then it just sits there as a $0 paid collection. Okay. I know that's a big one. Does anybody have any questions about that?
If you have a question, you can drop it in the chat and I'll be sure to ask it.
Okay.
You can unmute, but it might be most efficient if you drop it in the chat and I can make sure Brian gets to it.
Totally.
Yep. Awesome. And then charge-offs. A lot of people are kind of tied to one another. They're really not. A charge-off is, let's say Capital One, for an example. I went 30, 60, 90, 120 days late on my Capital One credit card. Capital One is going to say, okay, for tax purposes, as in Capital One, I'm done with Brian. He's not going to pay me. I am writing this off as a company as a write-off. Okay.
Yep.
Now that doesn't mean that Brian doesn't owe the money anymore, but I'm done with him. I'm writing it off. But people think with a charge-off, you can't buy a house. Well, I got to get the charge-off removed, or I got to pay this $8,000 charge-off. Not necessarily. It's a written off debt, which again, you still owe the money, but who do you owe the money to? If you're not getting phone calls, you're not getting letters, you don't know who to pay, that's not your fault. And that's why we have rights as a consumer to verify this information.
And with a big asterisk here, because neither of us are saying to anybody, don't pay your bills.
Never.
Never.
Never would I say that.
Pay a debt that you're owed.
Yep.
But
yep.
There are times when if you paid, and I hope I'm not skipping ahead for you too.
You're fine.
If you pay this off, it'll come right back up to the top of your credit report, and you may not be able to. You may sink your scores for a while.
I will tell you, Paying your debt off is the absolute last step. And again, I would never tell you not to pay your debt off, but that is the last step. We have rights as a consumer that 98% of us have no idea what's in place for us.
Yeah.
It is
Yeah.
written in the federal guidelines. It's my job and only my job to challenge the credit bureaus because they've never been challenged before. And that's what I used to do for a living is I acted on the consumer's behalf. I don't carry that license anymore, but I will always give a 1 hour free credit assessment and give them all the templates for them to do themselves. But go to the bureaus and challenge the bureaus to turn to these companies to verify the information. Was that information at one point correct? Most likely. I mean, there's errors on millions of people's credit reports, but
Yeah.
most likely because it's on my credit report at one point, it was probably correct. That does not mean in September of 2023, it is verifiable information. If it's not, it needs to legally be removed off of my credit report. Once it's removed, let's dig a little bit deeper and pay it off and come up with a settlement so it doesn't come back on the credit report. There's certain steps that we always need to take.
Mhm.
So following up on those steps, Brian, we had a question. So what do you do for collections? I know you mentioned this is the last step to take, but
Yep.
could you go a little bit further about what someone would do if they did need to get to that step?
Absolutely. Same thing with what I was just kind of getting into with charge-offs. Anything that's negatively affecting our credit profile, we have the right to have the bureaus go challenge and verify the information. And it's not like on day 29, same thing with these bureaus coming to us on day 29. They're not going to Capital One on day 29 saying, hey, Capital One, you've only got one more day to screw over these people. They don't care. It's not the bureaus do not care if we have a 400 and 800 credit score, but until we as a consumer challenge, verify, make sure it's verifiable, it's going to sit there. So the first step is either snail mail. I'm a huge fan of the old school snail mail when writing to the bureaus. I have all the templates again, or an approach that's not as successful. You can go directly to the credit bureau's websites, set up an account, and challenge and dispute information through the credit bureaus. Okay, I think the last two we already touched base on credit cards, types of accounts. So let's keep moving forward here.
Mm-hmm.
All right, this is a fun one. This is a very big one that I love to get into. Hopefully, I blacked out all the personal information, but all right. So hopefully, everybody's sitting around somewhere where they can see a computer screen. One of my favorite topics is the credit card game. Now, maybe some of you, millions and millions, and most people, they use their credit card every month. They get the bill and they pay their credit card off or pay their credit card down, however much they financially are able to. Most people think that is the right approach. And they're like, they get the statement, they pay it off, like, yes, I did what I was supposed to do. You did what you're supposed to do because you made your payment on time. Obviously, that's first and foremost the most important thing. Make the payment on time. I pull credit all the time, and I'm going over debts with the consumers, and we're going over the credit cards. Like, oh, that's not accurate. I pay that off every month, and we're going to get into why that happens and why I guarantee you that's happened to all of you, including myself. But now it's a game that I love to play. All right, so some big dates on here that I want to go over. The due date on this particular account is October 10th. You can see towards the bottom right, 10/10/23
Mm-hmm.
is when Citi wants their money back. Citibank, Dan
Mm-hmm.
Costco. Okay. Now, that date has nothing to do with the credit bureaus. This is just the date that Citi expects to get paid.
Yeah.
So all of you look at your credit card statements today, tonight, this week, whenever, and look for something called a statement date or a cycle date. Okay.
Yeah.
If you can see towards the top left,
Billing
statement,
period.
there you
Mhm.
go.
Yeah.
September 14th. That is the date that reports to the credit bureaus. So on the 14th of every month, Citibank hits submit, enter, whatever. And this information is emailed to me. And this is the same exact information that gets reported to the credit bureaus. Okay, you get your statement in the mail, you get it emailed to you. You're gonna have about a 2.5, 3 week grace period of between the statement date and the due date. So learn how to play the game. First of all, where does it say it on here? Back down towards the bottom right, minimum payment due, $35. So I have this set up every month on the 10th of every month or 8th of every month, I don't know. It's set up where my $35 payment comes out automatically. So I know I'm never going to be late for that 35% of the FICO algorithm. Okay. Now on this, I know it shows my balance is 513. I don't really care, which I'll get into why I don't really care what the balance that reported. On this, ideally, you want to put a reminder on your calendar, not of the due date, but of the statement date or cycle date. So about 9/12, 9/13 of every month, that's the date you're going to start logging in, and you're going to pay your balance down to $1, $5, $10. So then Citibank hits submit, they hit enter. That information sent to the credit bureaus. You have a $3 balance on a, what's the limit? $12,000 limit. Okay. I will tell you right now, by you listening to that, you know more than 98% of people out, they have no idea of how to truly operate the credit card game. I'm not telling you if you get your statement and it's a $10,000 balance and a $12,000 limit, and it's all you use for gas, groceries, Costco, whatever, and you pay it off, that's a bad thing. I'm not telling you that. But this is the difference of you having the best credit profile possible. 30% of our credit score is balance to limit ratios. You start playing this credit card game and you pay it down, not off, which we'll get into. You start paying this down to a $100 balance on a $12,000 limit, and that's how it gets reported to the bureaus every month. That is an absolute game changer.
Can I just clarify? Is
Yeah.
it okay? Let's say you have a $12,000 limit. Is it okay to put 10 grand on it during the billing period, or almost max it out so long as you pay it? Or
100%.
is that, or should you not exceed 30% ish?
Great question, Andy. So if
Yeah.
you're putting all that debt on there and you're paying it off before the statement even comes out,
Or down to $50 or $1.
whatever, the
Yeah,
bureaus
whatever.
have no idea what you did.
They have no idea. They don't care because
Nope.
it's not debt to income.
Correct. They have no idea. It's not like if I pulled a credit report and they had $40,000 of credit card debt, and I said, hey, you go do this, this, and this, and we're going to pull your credit in 2 months, and now it's at 785.
Yeah.
They don't go, oh, this is great, but 2 months ago, I don't know, it was kind of maxed out. Nothing like that.
Yeah.
Always think of our FICO score as it's a snapshot. It's a picture taken with a camera. What does our credit look like at this second?
But if you leave that big balance on there past the billing period date, now it will show on a new statement
Correct.
for a new
Yep.
month
Yep.
that you utilized 80% of
Yep.
your credit on that
Yep.
card.
And you'll see, you'll see a pretty significant drop in score. You would also see a pretty big significant drop in score if today I opened up a new credit card that has a $5,000 limit, and I went to Best Buy and I bought all new appliances for $4,000, and then it reports to the credit bureaus. He just opened up a credit card in August and now it's maxed out. What's going on? You're going to see quite a bit drop in your score there.
Bryan, can I ask another clarification question?
Yes.
How you were saying pay down, but leave $1, $5, $10 on there. Are you saying it's better to never have a zero balance and to have a small amount on there than it is to pay it off completely?
Yes.
Okay.
So if I had 6 credit cards, I'm not going to make sure I got $1 on each one of them, but 3 or 4 of them, especially my older ones, Absolutely. If you are trying to build your profile to have 750s, absolutely. Have it a minimum balance, not zero.
On older cards, so it's you using an older credit line.
Even if you've only got 3 credit cards, I would fully suggest on all 3 of them to have a balance and leave a balance.
Mhm.
Which, don't get me wrong, guys, like, I'm not saying that's the way it should be. I'm not saying I support the way that's how it works. It shouldn't work that way. We shouldn't have to rely on us having debt on credit cards. Unfortunately, that's the credit card game. So, that's why I say we all pay for our Netflix anyway with our checking account. Just have it touch a credit card first and then have your checking account going to pay off that credit card. I'm not telling you to walk around with all 5 of your credit cards. I walk around with 1 credit card, my American Express, and then I'll grab the city when I go to dang Costco.
Mhm.
Other than that, I put a bill on a couple of them. And I don't want to get too much into this.
Yeah.
But ideally, we don't always have a FICO score. I don't have a FICO score right now because I'm not asking to lend any money. Okay. So again, our credit report's about 35, 40 days behind us. So if I know in November is when I need to go buy a new car, in September, October, I need to make sure that this 513 is paid down to $5. It's not the end of the world today for me right now that this is a $513 balance.
Mhm.
Okay. That's getting ahead of ourselves. I mean, we can come circle around that again in the future, but not the ideal balance limit ratio on this one.
Brian, we have another question. So someone's asking, if I pay the majority by the statement date, leave a few bucks, and then the minimum payment comes out and I'm at 0, is that a good way to do it, or would you
Fine.
recommend something else?
Fine, because it's not reported to the Bureau again to the following 14th of the month. You're probably going to have something on there by the 14th of the following month. Yep.
And did we answer Tara's question? On old credit cards, $5 balance idea, is it a set it and forget it for months or more activity needed? Because I was going to ask you too, there's a thing about, isn't there a thing about reporting once in 13 months or something like that? I think that might be what she's asking.
Yeah. Great question. If you don't financially need to use the card, absolutely set it, forget it, cut the card up, throw it away. I've heard of people freezing it in the freezer in a block of ice. Whatever you want to do.
I think that's a Dave Ramsey thing.
Yeah. Set and forget it. Absolutely. Yeah. Store cards typically will close after 12 months of inactivity.
Yeah.
So I'm not telling you to go to Best Buy, go to Walmart, Kohl's, whatever, every month and go shopping, but just kind of always know if you don't want the card to close. Ideally, we want our limits to be 50,000 and our balances to be $20.
And there again,
close old credit cards.
And there again, do those cards report to, the Kohl's credit card? Does that report to all 3 credit bureaus? Maybe not.
Yes, because most store cards, bigger stores, use a Citibank.
Okay.
Or a Capital One. Yes.
Got it.
They're not their own bank or their own entity.
Okay.
Yep.
Okay.
Good question.
And Lydia had a follow-up question, or are we saying keep a small balance and pay the interest?
Well, you're not paying the interest. That's a great question that I got a lot. You're not paying any interest if you're paying it off every month. If you're putting $20 Netflix on there every month, there's no interest to pay because you're paying it off every month. It's a reoccurring bill every single month, so there's no interest.
And Tara is wondering if a store card auto closes, is that negative? Let's say I go out and
technically, because you're bringing the balances, the limits closer together. But if you have other credit cards if you're never going to use the store card, again, I'm not telling you to go to Kohl's if you don't shop at Kohl's to make sure that you keep it open. But technically, you're bringing the balance to limit ratios closer.
So you're not helping yourself by saying yes every time they say you can get 10% off your order today if you open your card. store card
Yep.
it.
I'm
Yeah.
going to give you an idea. I have a Kohl's card. I personally no longer shop at Kohl's, but I would say like twice a year, I will order dish towels, thing of sheets, just to keep it active.
Sure.
And because Kohl's, I do get that 30% off. So I do utilize it here and there. But, I'm not telling anybody here to go shopping every month and have balances on credit cards.
I had this come up, actually, Brian talked at our team meeting, and then in the middle between then and now, I had a card that was like, it's gonna close. And I was like, all right, well, I'm not going on a shopping spree, but I made a small purchase just to keep it going, keep it open.
Yep.
And that helped, and that bumped
Yep.
me a little bit, so.
Yep. You will notice, because that was probably an old card of hers that she hasn't used in a while. I'm telling you, if you put something on there, like she said, you're going to notice, because our credit reports list out the largest balance to the smallest balances. So the last 7 pages of my credit report are all $0 accounts, right? They're all paid off. And I see that a lot on consumer credit reports, that mixed into some of these $0 accounts is a credit card from 2001. And I say, hey, do you ever use this? No, I don't even know where it's at. Well, order another one, use it, and you're going to be blown away with what happens with your credit profile, because you brought that $0 account back on top onto page 1, 15% of our score's length of history. You just re-aged all that length. And I'm telling you right now, and I'm not trying to toot my own horn by any means, but this is stuff that no other loan officer probably doesn't have the knowledge to do. And I'm not knocking them, but that's just my point of, I do things quite a bit differently. If somebody comes to me and they get pre-approved and they're a 7-Eleven, yes, of course, I will send the pre-approval letter to the real estate agent. In the meantime, let's work on these 2 things. When you find a home, we're going to re-pull credit. Your score is 740. That's an 1/8 better in interest rate. It's the whole point, is cultivating those raving fans for our clients, right? Building that business together for the future.
And what would you say, and again, if I'm skipping ahead, tell me
Yep.
if you're gonna talk about this later, but how about like I'm sure you get this a lot, like credit repair services companies, that kind of thing. My opinion thought it has been that you just need to talk to you or a good
Yep.
mortgage professional who understands this stuff.
Yep. Um,
Do,
so,
do they do anything? Is there anyone out there that does anything for a fee that's actually worth it, in your
well,
opinion?
I
In
like
some
to,
cases.
in some cases, yes. We
Okay.
all may have heard of Lexington Law. They're one of the largest. They're online all over the place. They are a complete letter factory. All that they're going to do is they're going to send dispute junk mail to the bureaus. Some things will fall off. They are not going to educate you. They're not going to hold your hand. They're not going to guide you.
Okay.
Those companies are very tough to find. Um, you just need to be very careful. Now, there's also a huge difference in credit repair companies and debt consolidation companies. Debt consolidation companies, for 99.9% of the time, are a complete disaster. They don't really tell you behind the scenes what they're doing, but in a quick snapshot, I'm barely swimming. I can only make my minimum payments. I don't know what I'm going to do with all this debt. I'm going to call up one of these companies. They're going to help me manage my debt. What they don't tell you is it's a $400 monthly fee. They're going to tell you to stop paying on your credit cards. $400 is going to go into this account, the savings account that you can't touch. It's your money. Keep going into your savings account so they feel they have enough money to call up Citibank and say, hey, let's come up with a settlement. Well, what you don't know, because you're struggling, you're stressed, you can't pay bills, you're probably not following your credit, you're going 60, 90, 120. All these accounts are soon to be charged off, and your credit is absolutely down the drain. Sure, now I might have money to go settle that, but now it's going to take time, because I'm a ginormous risk to rebuild, right? To get that credit profile back into a better position. If I just let all 4 of these credit cards go, and I know that 30% of my score is balance to limit ratio, how am I going to turn around and go get some new credit cards that are awesome? You got to do it. They're not awesome. They're risky, super high interest rate, but then you got to restart the building. So big difference between credit repair, which I'm not a huge fan of, and then debt consolidation, which I'm not a fan of at all.
Let's actually build on that a little bit and talk about people who have had their credit really damaged, maybe 400, 500, something like that by
Yep.
whatever life circumstances, problems. Because in real estate, we encounter people who want to buy houses, and they might be pipeline customers for, a number of years while they do this, but often sooner than they think.
100%.
Unless you have a foreclosure but even FHA loans, foreclosure, that's only 3 years, not 7, right? Or 3 or 4
2
years.
years on FHA.
2 years on FHA.
Yep.
Okay.
After 1 year, if it's Chapter 13. Yeah. So
So I encounter people who they want to buy a house. We start the conversation. They find out from talking to a lender that they have, they're 500, 480, something like that. And then
Yep.
I don't want them to lose hope, because
Right.
they're not 10 years out from this necessarily.
Right.
They might only be a year or two.
Yep.
Yeah.
So like I said at the beginning, I will offer a 100% free credit assessment to get a credit report, sit down with them, whether in person or over the phone, break down a lot of what we're doing today. We're going to get into more of like what your rights are and what you need to do, what you need to open, which I think might be a slide coming up. But I don't know, and I think for the most part, we all kind of know what happens if loan officer pulls credit and it's kind of not the best credit. Hey, call me in 6 months. Go work on your credit and call me.
Yeah.
That's just not my style. I understand it's because it's a passion of mine. But the way that I see it, I'm just building a future pipeline with my passion, but I'm building a future pipeline for me and Andy for Mr. and Mrs. to go purchase in the future.
Yeah.
And when they're ready to purchase, Raving Fans, one of my biggest book of all time, and they're going to come right back to us. They're not going to go shopping. They know that their team is Andy and Bryan because of what we did for them up front, right? So most credit scores aren't as bad as what people think. Most credit profiles don't take as long to repair than what most people think. I can give them all the advice in the world. I could tell if they're not motivated, if they're not taking notes. I'm probably going to end it shortly because I'm taking a lot of my time to do these credit assessments. If they're motivated, I will spend an hour. I will follow up with them every 2 months, see how it's going, and I will hold their hands, and I will do everything for them, but send the credit repair letters. That's on them.
Yeah. They have
But
to
it's-
make this. They have to make the decision that
Heck
they're
yeah.
going to,
Yep.
they're going to fix this.
Yep.
Hmm. Yeah.
Brian, we had a question going back to credit cards real quick. So is it safe to pay on a statement or cycle date and skip your due date?
I mean, if you pay down to zero and there's nothing to pay off, but
Yeah.
I would suggest leaving a balance. Leave a balance. If you want to pay it down or off by the statement date, pay it down to $1. Just to leave a balance to build your scores and build your profiles, and then always have your minimum monthly payment paid automatically on your due date. But no, I wouldn't suggest always paying it off before the statement even comes out. I would have some type of a balance on there.
Just a small balance.
Yep.
And make sure. Yep. Make sure that it's paid on auto pay. Makes sense. So if somebody does, how do we rebuild credit if credit is severely damaged?
I think that might be the next slide.
Yeah.
Okay.
Oh, there we go.
Look at us. Look at us.
Yeah.
So
They're on the same wavelength.
here's some of my favorite accounts and things to do. If people don't have student loans, they don't have an auto loan, they don't have a mortgage, we again need a mixture of credit. We need to implement some type of an installment debt. And there's an account on Self Lender or self.inc, as you can see here, but it's the Self Lender's website. Easiest way to explain it, it's a savings account that reports to all three of the credit bureaus. Okay. It's a 2-year program. And every month for 2 years, you're going to set it up on auto pay. And it's like $24 and some change, unless that changed. So don't quote me, but it's like $25 a month is going to be set up on automatic payments from your checking account into this CD. Okay. On your credit report, it looks like you have $1,000 loan out. They're not giving you $1,000. It just looks like $1,000 on your credit report. Every month for 2 years, your payment's automatically made as an installment debt. The end of the 2 years, you get a check in the mail. Okay, it's a CD, so technically it's supposed to grow. You might make a penny. There's no making money on this.
Yeah.
But an absolute no-brainer if somebody does not have installment debt is to get some type of a credit builder CD. Okay. Credit cards. I'm a big fan. My favorite card by far is it's called the Rebuilding Card, right on Capital One's website. Fantastic card for a couple of reasons. You can start with a $200 minimum deposit. Secure credit card, meaning, again, you're a risk. So you need to build, you need to prove it. So technically and typically, you need to put up your own funds.
Mm-hmm.
Capital One is the fastest to turn it into an unsecured card, typically after 6 to 9 payments, and send you a check back for your deposit.
Yeah, they hold your deposit, $500, $1,000,
Yep.
whatever, maybe even 200 or something.
Yep.
I don't know. And then you're not going to be able to buy a whole lot on that. Like you could maybe do groceries or gas or something like that.
I mean,
And then-
ideally, if you're going to get a little starter secure card for $300, Netflix or your Caribou coffee once a month and only once a month, and let it ride. You're getting a card because either A, you have no credit, or B, you need to rebuild credit. So we need to make sure we come out the gates doing it the right way to get the biggest impact of scores as fast as we can.
You brought up a little side point that I'd like to note. There are people who don't have any credit.
Right.
Actually, I'll just point out Sherilyn, when she came here from India, for a long time, actually, I don't know, until we bought a house, she didn't have any credit at all.
Yep.
And that's not bad credit, but just no credit. So that could
Not
be
bad credit at all. Being a ghost is not horrible.
It's
because
not horrible.
being a ghost and then all of a sudden going to get 3 accounts and in great standing, you're going to get a 700 score a lot faster somebody that has a 500 with 10 collections. But it's hard for somebody to have 3 accounts, $300 limit, $300 limit, and a self account, and then in a year ask to borrow $500,000 for a house. Right? We need to build the profile over time because FICO is a risk assessment that I can show that I can make a payment on a house. Right? So it's just all about building that profile. And then other secure cards, I love the website nerdwallet.com.
That's a good one.
On nerdwallet.com, you can select credit cards and then you can select bad credit. And then it's going to list all of their credit cards that they, at the time, support and approve. And you can kind of read through what benefits you're looking for. Some of them at annual fees, some of them don't. But NerdWallet's another good website that I like to kind of get you kicked off with what credit cards you should get. Or else, honestly, always use me as a resource.
Fantastic. Well, it's about 10 to 2. I do have a hard stop at 2 or even a few minutes before.
Yep.
Is there anything else that we haven't covered that's critical, or anyone else have any other questions? We could actually talk about this for another 2 or 3 hours if you wanted to.
Right, yes.
Which we could. I could not pick up my kid from school and we could stay.
There's nothing, I don't even know. Is this the last slide on my end? Okay. I mean, that's more for consumers, what they think. We don't need to go over any of that. And
Okay.
then there's my contact info.
Perfect. Perfect timing.
Perfect timing.
Yeah.
I can go down to a 580 credit score here at Fairway. So a lot of people think they can't buy a house. They can buy a house. you know, especially with partnering up with myself and just kind of sitting down and coming up with a game plan for them. If you ever have anybody that says, I want to buy in 12 months, but I need to work on my credit, now is the perfect time to connect them with me. Don't call them back in 10 months and say you're ready to buy. That's not doing any type of a service for our buyers, because 5 out of 10 of those people are not going to be doing the right thing when it comes to their credit. 3 out of those 10 people, they might be ready to buy now just off of some very simple tricks that I can tell them. And we might have a buyer next month in our hands that we're going to leave alone for 10 months because they don't want to buy for 12 months. Let's be a service to our clients and build those profiles.
Yeah, that's good advice for us in real estate too. We always want to, in my opinion, we always want to have a buying consultation as soon as possible. And if they say, "Oh no, I'm not going to buy for a year," try to get them to meet with us earlier and talk to
Yeah,
the lender, because then they might find out that they can actually buy in a month or two and they just didn't
absolutely.
realize too. Or if they need fix, now they have some runway to
Right. Or
whatever.
hey, I got a couple collections I need to take care of first, and they think the right thing to do is to go pay them off. Like that's not the right thing to. But they don't know that. And as a real estate agent, we need to have that advice to be able to give them. Hey, let me, you know, talk to somebody first before you make
Yeah.
any moves.
And they just set themselves back by
100%.
paying off the collections. They think
100%.
they're doing the right thing,
Yep.
cleaning up their financial profile, and they
Yep.
made it worse and used up some money.
Last thing, you know, something that we should touch base on, and I won't get into this now because we all got to get going, but everybody know this. On average, a collection company holds on to debt for 90 to 120 days. That's
Yes.
it. That's it, guys. People think if it's on my credit report, it must be accurate. I say BS and complete opposite. That collection's
What
five, that collection's 5 years old. Just because it's on there does not mean today you owe them. That is your right as a consumer to challenge the bureaus. And if they can't verify it, guys, it's gone. It's
what
off
do
your credit
they
report.
Yeah, there's such a thing as it's water over the, like it kind of doesn't exist anymore. Because what
Yep.
do I do? What do if I'm a bank and I have debt, or a customer has debt, what do we do with that
Right.
after 120 days or more?
A,
I sell
a
it to
wholesale debt
somebody.
collection company will buy
We
it.
sell it to somebody.
Yep.
They wholesale it, right?
But
But
they don't
that
go to the bureaus and say, hey, Andy's a neighbor in West St. Paul. He's a great guy. Remove it off his credit report. They don't do
right.
that. So then it just sits there. You pull your credit, you're like, shoot, this stinks. I want to buy a house in 12 months. So I'm going to tell Andy, hey, I'm going to wait a year because I got to
Yeah.
work on my credit first. They start calling up all these companies and are taking steps backwards. Well,
Remember, debt is just another, it's another thing that's bought and sold by financial institutions.
all the time.
Oh,
We'll leave
yeah.
it at that. We could talk about that topic for another 2 hours.
Good. Thank you.
Of course.
Thank you so much. And
Thank you
also,
all.
can we wrap up with just one thing? I don't want to pigeonhole you as just the credit repair guy. Bryan is great for, you know, anybody. Fairway does a great job. There's a reason why you're there. And you're awesome for anybody who doesn't need credit help.
Appreciate that. Thank you very
Yeah.
much.